Hi, we're going to still continue to admit people. We have over 500 people registered. My name is Gary Tonks. I'm the president and CEO of the Arc of Ohio. Thanks for joining us tonight. We're going to be talking about the personal funds rule that's been promulgated by the Ohio Department of DD. It's not a new rule, but the department has accepted comments and made some changes to it. And we want to explain those changes to you tonight. We have with us this evening Lindsay Nash, Julie Gregg, and Becky Phillips from the Department of Developmental Disabilities. We're going to be posting or putting up some things on the screen so you can see things as we discuss them. For any of you that want to review this information later, we're not only going to have the hard copies posted on our website, thearcofohio.org, under resources, but we'll also post a recording of tonight's presentation. Those of you who gave us questions in advance, the speakers are going to try to answer those questions during their presentation. And any of you that have questions tonight, put them in the chat room and we'll try to respond to those at the end of the presentation. So Becky, I think you're first.
Thank you, Gary.
And Josh, can you put up the summary? And I forgot to introduce Joshua Cook and Amy Dubin, who are staff with the Arc of Ohio, who are going to assist tonight.
Good evening. My name is Becky Phillips, and I'm the Administrative Rules Coordinator at the Ohio Department of Developmental Disabilities. The personal funds of the individual rule has been in place since 2016 and was due for 5-year review. The 5-year review is a comprehensive consideration of all elements of the rule based on feedback we've received from stakeholders, and that's just what we did starting in the beginning of 2022. We considered all the feedback we got from external stakeholders as well as our own department staff regarding their experiences about the existing rule, how it was working and what was not working so well. Based on that comprehensive review, we created a new rule, and the new rule reflects revisions made to clarify provisions that have been causing confusion. We added additional paragraph headings. We aligned wording with wording used in newer rules, and we updated citations to administrative rules. So in that rule development process, we moved many provisions around and we reordered paragraphs, but we actually made very few changes to the substance of the rule. Okay, I think what's up now is a list of what is staying the same and what is changing. You can see that most of that document are responsibilities for providers that are not changing. Just a couple things I wanted to point out. In the testimony we received regarding the rule, we got a lot of comments about keeping receipts for purchases. And you'll notice that I bolded this. Actually, the currently effective rule permits a team to determine that receipts are not required. So that's just part of the team process. The team can set parameters about if and when receipts are required. So again, that did not change. And we also received some feedback about the provision that says you cannot sell items to an individual you serve or buy individuals from an individual you serve unless the transaction is approved in advance in writing. That is a provision in the currently effective rule. That is not changed. That also does not prevent someone from buying a birthday gift for a loved one. In terms of the changes of substance, there are really only a few. We did add another situation in which a provider might be required to restore an individual's personal funds in the case of a loss, and that would be for failure to maintain adequate documentation. We eliminated the need to record the purpose when personal funds are withdrawn from an account. There are requirements regarding the provider's system of accounting, and that was one requirement we removed. And then just in terms of requirements for independent providers, we did eliminate the requirement for an independent provider to have a written policy regarding management of personal funds. The currently effective rule requires all providers, I believe the wording is, shall develop and implement a written policy. Then we say you'll train your folks in the policy. So that didn't really make sense for independent providers. So that was eliminated. And then we also eliminated what folks told us was a big hurdle, and that was the requirement for an independent provider to have another person reconcile an individual's accounts. If you're the independent provider, you're the only person providing services, you're, by definition, you're not allowed to employ or engage anybody else to provide the services. So that really didn't make sense. And based on the testimony, we eliminated that requirement. So that is the summary of the changes.
Thank you, Becky. Good evening, everyone. I'm Lindsay Nash. I'm the Director of Compliance for DODD in the OSAS division. I think as Gary mentioned when he kicked off the meeting, and as Becky mentioned, this is not a new rule, although I understand some of the requirements in the rule may be new to you, and that's why we're having this meeting today to kind of go over some of the new language and introduce you to the requirements. I just want to say a few things to hopefully put you at ease if you're apprehensive about this rule or complying with this rule. I want to start out by just talking a little bit about the rationale for the rule. You know, when you are legally responsible for somebody else's funds, it is important that you maintain documentation to show how those funds are kept and how they're spent. This is for the protection of the individual, of course, but it's also for the protection of the provider, especially in the event that there's any kind of allegation of misappropriation. And for those of you who are rep payees for Social Security, this is exactly what you've already been doing. Although you don't submit it to Social Security, this is the kind of documentation you are required to keep in the event that they pull you for an audit or ask for that documentation. So for those of you who are already doing it, this will not be new to you. As far as the compliance review process, I wanted to say a few things. We are not going to do a detailed audit of these ledgers, right? So we're looking at them, of course, during the review. We're looking to make sure that the funds appear to be accounted for. If the plan requires receipts for certain items, that the receipts are available. If you are in substantial compliance, but there are a few issues with the ledger, we can give technical assistance. We don't have to issue citations if you're making a good faith effort and you're in substantial compliance. We can certainly work with you on that. It is, let's see, it's October 11th. This rule will not be effective until we believe December 1st. And then we will give some grace as to when we start looking for these documents. So on February 1st is the earliest that anyone would anticipate us looking at these through a compliance review. So that gives you 3 or 4 months to kind of familiarize yourself with the rule, get a plan and process if you haven't already been doing this. If you're already doing it, keep going on the same path you're going down. We will give you some grace. And finally, between now and when the rule's effective, we have several templates that we can provide. We can provide them to Gary to provide to you. We can also put them on our website. You're free to use those templates. If you like them. If you would prefer to use an electronic template that meets the same elements of the rule, you can certainly use that through an app on your phone or through some other mechanism. These are just tools that may be helpful to you. You're not required to do them. You can use whatever form you want as long as it complies with all the elements in the rule.
I hate
yes.
I'm sorry. Those of you who know me well know it's hard for me. But as we discussed, a detailed checkbook registry might be good enough.
Could be, yes.
Yeah.
If it's detailed and meets all the elements in the rule, it could certainly function. Again, we're not going to dictate the form. We're happy to provide you resources if you want them. If you already have a system that works for you, you can continue to use that, as long as it, again, meets all of the elements in the rule. Sorry, did you have something else, Gary?
No, thank you. It just,
Okay.
yeah.
Sure. Several of you submitted questions to Gary, I guess, over the weekend or last week, and he was nice enough to compile them for us. And he sent them to us last night, and we have taken a look at them, and we have some answers. So I'm going to turn it over to Julie Gregg, who is a review manager within OSAS, and she will walk you through some of the questions we've gotten to date. And then if there are additional questions, we can certainly take those.
Yes, good evening, everyone. As Lindsay said, I'm Julie Gregg. I'm one of our regional compliance managers with OSAS. And in looking over the questions, the first several really are about whether a rule applies to you, depending on the situation. And so kind of the biggest way, the easiest way to explain it is if you are assisting with personal funds while you're being paid by the waiver, then the rule applies to you and you have to follow that for those funds that you're helping with while providing that waiver service. So if you're doing something outside of being paid by the waiver, we do not have authority over it, and you do not have to keep those requirements that are outlined in rule. So that kind of addresses the first, at least 1A through E. As well as 2A and 2B and C. I knew there was one coming up that was that does not apply to, or we had different answers for, sorry. I'm going to jump to question 3, which is about individuals paying for staff participation. So in ICFs, there's a little less flexibility. And generally we never want anybody's participation in activities to be contingent on them having to pay for staff. It shouldn't be something where the only way they get to go do things is if they pay for their provider to go with them. But in those circumstances where it might be appropriate, we expect that to be a team discussion and some details outlined as to what that looks like and when that will happen. And that decided amongst the team and potentially put in the plan. The question about appeal process, if you disagree with the team's decision on receipts, there's not an appeal process. There is a way where you can enter a dissenting opinion to the plan, or you could refuse to sign it. But really it comes down to, you need to have some more discussion with the team so that everybody who's involved and responsible for implementing that plan is in agreement on what is needed. Question 5 is about shared living subcontractors and who's responsible for maintaining that documentation. And that is whoever is billing for the service is ultimately responsible for compliance. That's who's going to get reviewed. That's who's going to get citations. And that is who ultimately has that responsibility, whether it's direct employees or subcontractors. It's whoever is billing for the service. Yes, a reminder with number 6 that there are asset limits through Social Security and JFS. So make sure when you're assisting somebody with funds that you're not exceeding those limits and jeopardizing their benefits. And then the definition of personal funds. So from the rule, that is basically any money that the person has, any financial resources, earned income, unearned income, investments, monies from a trust fund or inheritance. So any money that person has falls under personal funds. There was a question earlier about asking for clarification when we talked about natural supports. So when we issued guidance about natural supports with shared living providers not being able to provide natural supports. What we were getting at is that shared living is a 24-hour service. So on those days when you're providing shared living, you can't clock out during part of that day and provide a natural support. So any day that's being billed as shared living, you're the provider the whole day and have to follow the requirements the whole day. If you're providing that 7 days a week, it's all the time. If you're providing it only a couple days a week, maybe on those other days you could, but on those days when you're providing shared living, it's always, whatever you're doing has to follow the requirements as a paid service. And I think somebody was jumping in with a question or a comment.
And Julie, one of the questions I got today that I wasn't able to give you in advance was, we have some individuals, whether they live in a congregate setting or with the family, they may have a part-time job and maintain funds on their own. So we've had questions. So he doesn't want me looking at his account. We discuss openly that you can't go above 2,000, but he keeps about $100 on his own. Am I responsible to reconcile those funds?
If that is something the person has been assessed that they can handle that independently, it's all identified in the plan, you have no responsibility for those funds.
Okay. So this can be really very, very simple, that it doesn't have to be complex. If I'm the payee and I'm dad, and I keep a good register of where the funds go, and my team, and believe it or not, we have questions a lot about, I've never heard of the term team. There is no team in my life. I meet with the SSA over the phone and no one else is ever around. I mean, we had our fall conference. This came up repeatedly, that families didn't know what a team was. And I see it's been asked again in the chat room.
Yeah, when we say team, we mean those people that are involved with the planning and the provision of services. So the SSA, obviously the individual is the most important and the center of the team. Any people that they've identified as being important to them, that they want to be involved in the planning process, their guardian, if they do have a guardian, and then any providers, and any, if there's any specialized services that they receive, if those people play an active role as well.
And is it okay to, I mean, I think we're into the question and answers. Is that, so someone is saying they've been told that they are shared living, even though they only work 5 hours a day. And they didn't understand your statement about 24 hours.
Mm-hmm. So shared living is a daily rate service, and it's required to be authorized if the person who the person who provides more than 20% of the services lives with the person that has the same residence as the person delivering service. And so it's just a 1-day rate. And that 20% is the requirement, 20% of the services. So it may look like you're only actively involved at less than 24, but because of the way it is authorized and billed, it is considered a daily rate service, a 24-hour service.
So there's also a person they're questioning the term 24 hours because the rule doesn't say 24 hours. It talks about a daily rate, and it's coming up repeatedly. We're getting that too, that there was an assumption from the beginning that shared living providers could have employment outside the home. And so I think people are just questioning the term 24 hours.
And daily rate, it's a daily rate service. So it's not billed in 15-minute increments. That's the alternative billing rate for things.
You're correct. Thank you.
And so, yes, I talk, when people start talking about money management versus personal funds, I correct them because those are two distinct things. So maybe I just need to correct the words that I'm using, and it is a daily rate.
I would just say too, this significant distinction is that the provider and the person who's getting services have chosen to live in the same home.
Right. So someone's had a stable account question. That's not really why we're here, but a rep payee can open a stable account. So the Ohio State Treasurer's Office is really very good at responding to questions, and we do training with them often. But just because you're a rep payee doesn't mean you can't have a stable account. Correct me if I'm wrong, anyone, but.
I don't want to say yes or no either way, because I'm not familiar enough offhand to be able
Right.
to.
So that's with again, do a search for the Ohio State Treasurer's Office. They've got a good question and answers piece there, but they also have a toll-free number you can call, and they're very good at just answering the questions over the phone. Okay, they're coming in hot and heavy.
Any comments need to be put into the chat. I know you're able to raise your hand, but we won't be having any audible questions asked. They can be asked through the chat, and then we'll answer from there.
If it's okay, Gary, I can kind of read through what I'm
Please,
seeing.
yeah.
Okay.
Yeah.
So I see if the guardian gives the money directly to the individual, we will not be responsible for any records, correct? Correct. If the person they're given money that they're able to handle independently, you are not responsible for that. If the guardian is a paid provider, they would need to show where they dispersed that money to the individual, but then there's no further records required for where the individual spent that. But if the guardian is not a provider, that's just the person handling their money. We talked about the team.
Julie, could I throw in there too?
Yeah.
I know we're not looking at the rule right now, but it is available and is posted. But in the purpose statement of the rule, it's standards of accountability for a provider when the individual service plan of an individual served by the provider indicates the provider is responsible for managing the individual's personal funds. So it's not just something casual or someone who manages their own funds. It's very clear that when you've been designated as the person or entity responsible for management of those funds.
Thanks. I see there was a question about shared living providers must keep receipts for all money spent on the client, even if someone else is the rep payee. So it's going to depend, assuming the shared living provider has been identified as being responsible for helping the person with personal funds, then it's going to depend on if the plan identifies that they're going to keep receipts or what they're going to keep receipts for. And if whatever those things are, then they need to keep receipts. So we don't have authority over rep payees. So rep payees report to Social Security. Our concern is related to services provided under the waiver as assistance with personal funds. If you do the money management service, which is a separate service, they also have to follow this rule, but they have some additional things. But we're focused on that waiver service delivery and your requirements during that. Going through, scrolling through. So I am a shared living agency and one of my shared living providers for her sister. Can she be her rep payee? And for me as an agency, am I then responsible for managing her funds? So I think this is saying that the agency provider employs someone's sister to provide direct services to her family member. If she's a rep payee, that's a Social Security decision. But if she is doing any assistance with her sister's personal funds while providing that shared living service, then the agency, the billing entity, the provider agency that employs her, overall is responsible for ensuring those records are kept in line with rule.
I'll
Thank you,
jump
Tom
in,
Hess.
Julie.
Thanks.
I'm sorry.
Sorry, I was just going to say a lot of questions about stable accounts. I don't think anyone from the department on this call is an expert in the stable accounts, so we'll just have to direct you to them for follow-up. We don't want to give you incorrect information on that, so please contact the stable account folks directly with those questions.
There was a question about how to access the rules. All of the department's rules are on our website, so dodd.ohio.gov. And at the top there, I click on it so much you would think I would know it offhand. It is forms and rules. And then rules in effect is what is currently in effect. And Becky, our rule guru, keeps it all up to date with where rules that are in development are in the process. And rules that have an effective date but are not yet in effect. So they're always there. And I did want to mention we did a provider training. It was back in March on personal funds, that if you have a lot of questions about what needs done, that might be a resource. We will take a look at what needs updated with these little these minor changes that were made in the rule, to make sure that matches when it's updated. But that is, there's a recording and there are slides available to go back and view that.
And we have a couple of other questions here. I think we may have, or there's quite a bit coming through. If you don't, I can ask them here. Because COVID shut down all social events and activities, one can accumulate more money because they continue to work and their pay rates were increased and can exceed the $2,000 easily. What do we do about that?
Do you want me to take that one, Julie?
Sure.
Okay, so yeah, Debbie, that's why stable accounts were created. So when your son is nearing that, or even before, stable accounts are a federal and state legal way to shelter assets and still maintain eligibility for Medicaid. So what many families do, what many individuals do, is they just have a portion of their monthly amount transferred over to a stable account, which keeps them under the $2,000 limit. And then they can take those funds out of the stable account and use them. You get like a debit card. And as long as you use that money during a 30-day period, it doesn't count against you. So I could stay constantly at $1,500 because every time I get a paycheck, I transfer it over to a stable account with the treasurer's office. So it's a relatively simple way to keep under $2,000.
Thanks, Gary.
My son receives SSDI. Is there a difference? He's collecting death benefits from his dad. I cannot work. I collect shared living. I have no choice.
I'm not sure I missed what the question
So
was.
it's my son receives SSDI. Is there a difference? This is shared living. So there is so explain the difference between the shared living personal funds and the personal funds coming in from SSI, SSDI.
So personal funds is any money the individual receives that a paid provider is helping them with.
Right.
So it could be if that shared living provider is helping her son manage his SSDI benefits, his death benefits, any of that is going to fall under that personal funds definition.
So can I add to that?
Yeah.
Because I think, and we have a challenge with families. Shared living funds are the funds paid to by the state to provide shared living. That goes to the parent, who is the provider. The SSI, SSDI, veterans, railroad pension, that goes to the individual. Many of our families don't know that you should have always had separate bank accounts. So you keep your account for shared living and then have another bank account for your son who happens to be getting SSI, SSDI. And what you do with your funds is what you do with your funds. The other thing that our families need to understand with shared living, they can also charge their loved one room and board. So it's another way to stay under, even if you're not shared living, to stay under the 2,000, because many of our families are legally charging their adult sons and daughters about $600 or more a month. It's taken out and you document it in the check registry out of your son's account and you put it in your account. Once it's in your account, it's just your money. This rule only applies to the person on the waiver or in the ICF.
That is correct. And if your family or your shared living household would decide that you want kind of one set amount that you're going to agree that's going to cover rent, utilities, food, or whatever you decide to cover it, you could write that up and have it there included in the plan. And then if for anything that's included in that, there's not that requirement for those individual records.
Josh, do you have some work? Can you?
Yeah, so here's some more that are coming in here. So we have we only use the bank card for purchases. I don't use my daughter's card for online for anything. So how would I prove those purchases for her? Yes, from Kim Mitchell. You might have to reword that and send it back in to kind of see. Are you using it for online purchases, or are you using the bank? Say you use it for all purchases, but is it for online or not? And it might have to be kind of reworded.
If you're taking out like cash, so the records are for any type of account that you're assisting with. So if you're maintaining a bank account, food stamps, gift cards, and then cash accounts. So if you're using the bank card and withdrawing funds, you're then creating a cash account. So you have to have those records for that cash account. So maybe, Josh, that is what.
Yeah, that's where.
I think so. I know I only ever use a debit card. I have no cash on hand.
Yeah.
But I can go to my Chase account online and print out every transaction I've had that month or that year. I think if I'm old school, if I printed that out and it didn't say what my cash was used for, I would just write in what I used it for. And then if my team said I needed receipts, I would staple the receipts and use that as my ledger. Correct me if that sounds bizarre, but that seems like a logical way that I would do it.
Here's a situation from Donna. If the guardian is the payee and is the spouse of the independent provider, who is also the guardian, the rep payee can give the client money for lunch, but the independent provider can't. Is that correct? I'm confused about the rep payee statement.
So the independent provider, if they're distributing the money to the individual, then they're helping the person spend it, then it kind of falls under the oversight of the rule. If the non-provider, the guardian who's the payee, but I don't think is the provider,
Correct,
gives the money directly to the individual, and that's money the individual can handle independently, then no records for our purposes are required.
Okay.
So in no way are we saying that somebody can't do these things. It's just when you do them as a paid provider, then you have to follow the rule and have those records.
Okay. Ramona asked this question. So you don't have to keep receipts if the plan doesn't specify, but you need to keep a log of how the money is spent. Is that correct?
Yes.
All right. Wanda, am I understanding this correctly? The rule has already been changed. I was under the impression that this meeting was to get input before changing the rule. Can,
We are
Fine.
expecting the rule. Sorry, Becky, you want to take that one?
Yeah, sure. Thank you. So there's a regular process we follow for all rulemaking that we do, and it includes a clearance period before we ever file a rule, where the rule is posted out at our website with an explanation of what we're doing. So we've already gone through that whole process. The clearance period was back in March. After that point, we look at the clearance comments that we get, then we make adjustments, and then we file the rule, and then there's a public hearing. Again, this process is all laid out for us. It's not at our discretion. It's the process state agencies have to use. And so it was at the public hearing phase that we got feedback from folks, primarily shared living providers, that had some concerns. So the rule right now is again in filed status and is moving forward, but we are having this conversation to try to help respond to additional questions and help people understand that really not that much about the rule has changed. So that's where we are in the process.
okay. Is there a worksheet of from SSI available to determine how much I can charge my adult son for room and board? I think some families, some of these things happen from, should be happening anyways because of SSI. And so they're trying to kind of correlate the two. But is there forms, kind of worksheets available to kind of help run through these things?
Again, I'll jump in. Please, speakers, just don't tell me to shut up if I should. But so we have a room and board contract available that if you ask us, we'll send to you, and Social Security has accepted that. Some people at Job and Family Services tell families to divide the mortgage, the rent, the utilities, the food budget for the household. Many of our families are older and their mortgages are paid. What I advise families is to think of yourself as a 1935 boarding house. Your loved one who's an adult qualifies for Medicaid and SSI because they are a household of one. Therefore, if you think of yourself as a boarding house and you're providing room and board, you come up with a reasonable amount. Social Security and Medicaid have accepted about, because the maximum payment is about $800 a month, they've accepted in Ohio a $600 payment. So you should have a document. You should have, because it's a provider controlled setting from the department. You own the house, you're providing the meals. We'll provide you with a room and board contract, and you say, I, Gary Tonks, am leasing this to my son, and he will pay me $600 a month. That's your documentation. And then in your registry, if you provide a receipt to your son, that's fine. But if you have that room and board contract that says every month, this is what you pay. And remember, Social Security and SSI is probably going to go up in January. And that may need to be adjusted, but that's been accepted. And in any of you that for the first time are applying for SSI, that should be in your hand when your son's 18 and you're going to Social Security office. It's just a bit of advice that we've given families for decades.
Yeah. If I only do shared living, this is from Susan Young, if I only do shared living 4 to 5 days a week, am I correct that there is no responsibility to those for those other 2 to 3 days?
I don't want to make that blanket of an answer because shared living is kind of a unique situation. So if you're providing shared living 4 to 5 days a week, is somebody else in the home providing it the other 2 to 3 days a week? And then because it covers kind of everybody in the home, are you filling in, while you're not the billing entity, are you indirectly providing the shared living on those other days? So it's yes and no, potentially, which was super clear and helpful, wasn't it?
So someone
If
asked,
you were providing no other service on those other days, we do not have authority, as you're not a paid provider on those days.
so someone asked about buying and the example was, we bought a package of hot dogs. My son ate 2, I ate the rest, or vice versa. Do I need to account for that? When I say room and board, board is food. It simplifies it if you do one lump payment from here's your share of the board for the month. Here's your share of the rent. I'm renting you a room with kitchen and living room privileges. And you can get into details. But Linda also asked, can I just say monthly expenses? It's really easier to just have a standard room and board contract. And you figure out what that amount is. And then your only receipt, if you're even required to have a receipt, is I've accepted payment for room and board based on a contract I've got with you. And I know some of you are attorneys, but that's really worked for decades for us. If that's not, and then you don't have to piecemeal it.
And Gary,
Yeah.
I'm just going to add, even if they don't use that contract, if on a ledger they had a general amount for groceries,
Right.
a reasonable amount that is that person's share, we are not going to get into asking for a receipt and asking for who bought the hot dogs, who bought the buns. We are definitely not getting into that level of detail. We're looking for a general accounting and a reasonable amount attributed to the major categories: utilities, rent, groceries, etc.
Wonderful. Yeah. It's the same with someone who asks, what if my son buys a bag of potato chips and he offers me some? Have some potato chips. Or if you're in
Yeah.
Cedar Point and he buys fries and he offers you some, have some fries.
Yeah, we're looking for the most egregious situations where we've had like congregate settings where one person is contributing $200 of food stamps, and that's coming off the top. And then they're also paying 1/3 of all the left, like that. Please. We're not counting hot dogs, so help me. If somebody counts your hot dogs, call us.
Right.
Right.
Here's a question from Jim Cordero. I'm the shared living provider for my daughter, and her mother is her guardian and handles all of her transactions. I do not handle any of them. Do we need to keep receipts?
If you are not providing any assistance with personal funds while doing shared living, then you do not, we don't have authority over that. If her mother gives you money to spend on her behalf to go shopping for clothes or to go to Cedar Point, and she can't handle that independently, that money that her mother, the payee, distributed to you, you have to account for.
Right. Some people have said they had to leave. We're going to put this recording and all the forms we talked about on our website. Even the form that the department has, we'll put that on our website under resources. So go to thearcofohio.org, click on resources, and it'll be there. And someone asked about, is room and board taxable? We're not tax attorneys, none of us. I compare it to when I was 18 and had a job and I was still living at home, I was giving my parents money because I was part of that household. I don't think the IRS is ever gonna, but I'm not a tax attorney. I've been doing this for 45 years. I've never recalled the IRS ever getting into this because it's not a substantial income.
I have a question from Sean Crable. I did see that number 3 or 4 stated a specific turnaround time for funds to be received. Is this just for additional funds or reoccurring allowance funds that are stated in each individual's ISP?
I'm not sure the number 3 or 4, what that's referring to, but the rule does require if an individual requests money to do something, the provider who's assisting with personal funds has to make that available within 3 days of the date of request. And the provider receiving the money has to make that available or sorry, has to deposit that in the individual's account within 5 days of receipt of the funds. So if that's less, since I think Social Security is almost always direct deposited, but if they would receive some kind of check that is deposited in their account within 5 days, and then if they want money for something special over and above what they have immediate access to, like in their home, maybe it's in the bank, that has to be available within 3 days.
So Gretchen's asking, if I've got basic cable, but my son who has a disability wants high-speed internet and Paramount Plus or HBO, can he do that?
You could certainly make that part of your room and board, that
Right.
over and above, this is what we have as a household, and you want additional things.
Right, yeah. Gretchen, just document it some way that he's paying that extra fee. I had a foster sister living with us when I was growing up, and my parents used the daily rate they got for foster care because she wanted a phone in her room. And it was all documented that she wanted a phone in her room and she paid for that. Not personal funds. This is probably a bad example, but you just document it.
Can the term monthly expenses be acceptable on the bottom of his check that I have through shared living?
When supported by that kind of residency agreement or that contract that identifies what that amount is and what it's covering, yes.
Yeah. Linda, email me. We'll write it up together.
There's a question I saw about, so if it's written in my plan, the record keeping is not necessary. So the record keeping is still necessary. It's that receipt portion that can be determined by the team on when that is necessary.
Anita said, we just started to do rent this year because we refinanced our house and switched to a 15-year mortgage. My son could no longer afford to split a fair share. We are charging him $675 a month for room and board. Gary mentioned Ohio is accepting $600 a month. Should we adjust his room and board to $600 a month? We were never told a certain amount we should be charging.
$675 is fine. You're safe. You're fine. I just didn't want to get into, we never wanted to get into Social Security with, I live in $1 million house, so my son should pay more. You know, I think that's fine. And again, correct, for DODD, it's documentation. For for Social Security, it might be justification and justify why it is. And there is nowhere in Columbus I could live for $675 a month. Nowhere. There's nowhere in Youngstown I could live for $675 that included my food. So I think you can easily justify that amount. It just Go ahead.
Oh, sorry, Gary. I was going to add, from DODD, we're not second guessing rent amounts. We're looking for what the amount is and where the money's going, but we don't have opinions on what the amount should be.
Go ahead. Sorry.
I saw that there was a question where I'd said earlier where we don't have authority over rep payees, but what if they're on the waiver and the agency is billing the waiver for that service? So what happens there is you're doing your rep payee responsibilities as a paid waiver provider. So it becomes assistance with personal funds for our purposes. And that's where we have the authority. We don't have the authority as a straight rep payee. It's because you're billing that under a waiver service, probably HPC, maybe money management, maybe adult day services.
Anne said, Becky, you said Dodd is has no authority over rep payees. Rep payees only report to Social Security. Is this true even if they are on the waiver and my agency bills their waiver for the service?
I think that's the question Julie just answered.
Oh, I'm sorry.
That's okay.
Missed
That's
part of
okay.
that.
It's hard to keep track of the chat. I can't even
Yeah.
scroll down and see it. I'm having a
Right.
hard time keeping up.
Yeah, all right. Does the contract room and board have to be approved by the team and become part of the plan that the audit of receipts is compared against?
Do you want me? I don't think so. That's just an advocate's perspective that all they want to know is that there is documentation of why I paid you X amount of dollars.
Yeah, I don't know that it would need to be approved by the team.
No,
But it's gonna, if that is showing where money is going, it's gonna be part kind of your file that you have. So we can see, why did they write you a check for $650?
right.
And then we know, well, this is why we also don't see an electric bill. Or if that's just rent, we'll need to see, you'll want to have the team involved and aware of what is covered by that.
Right.
And the information in that contract.
Right. One of the things we get involved with as an advocacy organization is the congregate living setting where 4 guys live together and they share utilities. And one of the guys moves out. And somehow now I've got to share the utilities with just 2 other people instead of 3 other people. And I don't have the resources to do that. And that becomes an issue for individuals of low income and families that are not legally obligated to do anything for their adult sons or daughters. It's just something I'm throwing in, but that comes up a lot if I live in a congregate setting. And even currently now, 2 of the guys don't live there anymore because COVID they're sheltering at home. And now I've got to pay the cable bill, the electric bill, the gas bill, and a greater share than I ever had to pay before. You don't need to comment. It's just something that we're dealing with regularly.
I had a message that was direct message to me. Can you guys differentiate? They want a little bit of clarity between the having record and actually having receipts. As a bigger part of the question looks like it is, what would make the team require the receipts and not just the record only?
Well, again, so the record, they can't write that into a plan that you don't have to keep the record of the funds.
Right.
The receipts, it would really be up to the team. Looking at the nature of the relationship between the provider and the individual, if there's an agency that's providing, because there's a lot of people involved, maybe it's very important to have all those specific receipts.
Okay.
Maybe in a different situation, however the team determines it.
But there's not a set criteria. It's just if the team judges that that's what should happen, then that's what happens, right?
Yes.
Right. But they can only waive the receipts. They can't waive the record.
Right. And I think this person understands that. I think they're saying, I think if you're a family and you're gonna do the record anyways, because they can't waive that. But then they say, you know what, we want to see your receipts too. I think they take it as kind of not take offense to it necessarily, but why are we going this extra step if it can be waived by the team? Why are you requiring it, kind of thing? Okay. Robin asked, would it be best to put in each individual's ISP on how their money should be tracked or documented? Example, should we state that they need receipt records for tracking of personal funds overseen by the rep payee, or is it not necessary unless receipts are not to be kept? I'm a little confused on when it needs to be specified in the ISP and when it does not need to be.
So there are a number of things that are required to be outlined in the ISP, and I'm trying to go from memory, so bear with me, but it has to talk about like who is the rep payee, who the provider that's responsible, what amount of money can be spent by the provider on behalf of the individual without team approval, some of those things. And then what the individual can independently handle, what they've been assessed that they don't need assistance with. And so kind of the default would be that anything that that individual can't handle independently would have a receipt. That's where it becomes with the team. So if you kind of want to, if the team determines that that's not needed, if it's something different that is needed, then it's important to get that in the plan and documented so that you aren't being held to something that you're not expected to have.
And then let's do this as a final question. Did I understand that you said the bank registry or a statement may suffice for the record of expenditures?
So your check registry, your checkbook registry, if it was done with enough detail, could meet the requirement. The bank statement is not really, because the bank statement was what you're going to compare to your record to reconcile it. You're going to compare, it needs to match up. So you can't really use that as your record, because that's kind of the official place you're going to match your checkbook registry to.
Yeah, I think that came up, Julie, on the comment about the debit card. Because there is no check registry. If it's a debit card, they use.
Yeah, then your bank statement would be
Right.
that you can get those.
Printouts.
Becky Phillips and I are maybe the only people who still use those, but you can get those blank registry things at the bank or online. You could use one of those. Yeah.
I haven't balanced my account in 30 years. I'm really bad. I shouldn't say that. But I balance the ARCS account. I can do that. I can't thank you guys enough. I think this went well. Remember, go to the arcofohio.org. Josh is also our webmaster. So give him a little time and we'll post this. We'll post a recording of it. We'll post all the documents that we shared this evening. But really appreciate the speakers and the department's willingness to just explain this. Really appreciate you all. So thank you and have a good evening all.